Standard Bank Business and Commercial Banking's Unlock Africa conference has concluded in Cape Town following 2 days of deliberation around the economic opportunities and challenges on the African continent. With rising tensions geopolitically and a fracture in global economic relations, there's a feeling that now is more timely than ever for Africans to get their houses in order and push the frontiers of growth and development. This as the continent is said to be full of potential and has to meet the needs of a rapidly growing population. Nompumelelo Siziba caught up with the Standard Bank Group CEO, Sim Tshabalala. She first asked to give his reflections on how the conference has gone so far.
You've been having this conference, Africa Unlocked, looking at the unlock the economic potential of the African continent, and you've had a series of discussions talking around infrastructure, investment, connectivity, how capital interfaces with all the developments that need to take place. What are your reflections of the conference thus far?
Nompu, I think it was a great conference. In fact, I would venture to say that it was better than last year. And perhaps let me make reference to the second last panel today, because it summarizes what all of this is about. It was a family office, so people that are running businesses that come from wealthy families, and they were talking about creating wealth. You know, how do entrepreneurs create wealth? How do they preserve it? How do they pass it on to future generations? And then how do they govern these organizations? And it really is a story of the African continent. Entrepreneurs, hustlers like my dad was, people who go out there and make a difference and build great businesses which then become behemoths in the fullness of time. And so that's what this conference was about. How do we take advantage of the opportunities presented by the African continent, which is a great demographic dividend, the need for infrastructure because of the minerals that we have, the copper, the cobalt, the manganese, the graphite that the world needs for its transition. How do we position ourselves as Africans to take advantage of this massive opportunity?
So you have been, on record publicly to talk about the need to generate more capital for investment in things like infrastructure, and you've spoken about the possibility of some relaxation of the Basel III capital requirements. Just in sort of layman's terms, just explain to us what you're agitating for.
Let's start at the highest level, if I may, Nompu. South Africa chairs the G20 and also chairs the B20. In the B20, there is a task force called Finance and Infrastructure. It's made up of about 160 people from throughout the world. The United States, the United Kingdom, Zimbabwe, South Africa, China, Russia, from all corners of the earth. And we've spent the first 6 months of the year grappling with what needs to be done, firstly, to deal with the infrastructure deficit that exists on the continent. How do we focus on the critical infrastructure, the power? 600 million people on the continent don't have access to power, for example. The roads, the bridges, and so forth that need to be built, firstly. Secondly, how do we then mobilize the finance necessary for those? In the African continent, we need about $170 billion per year to finance this infrastructure, but we have a gap. We cannot raise 85 billion. So how do we get the private sector, the public sector, and philanthropy to find new and interesting mechanisms to get more of this money? And lastly, how do we get the money to flow from that infrastructure investment into the economy and into SMEs and into individuals? Now, the second of these objectives focuses on what we need to do. Let's just think about the private sector. How do we get banks and insurance companies to be more active in infrastructure? One of them is by reducing the amount of capital that banks and insurance companies have to hold to protect the depositors against the risks that they take when they lend. At the moment, the rules are too stringent. We hold too much capital for those projects, and we are suggesting a new way of thinking about them so that you hold less capital. When that happens, the banks and insurance companies can invest in more projects. That's essentially what the suggestion is. And technical people obviously will work through this. We're respectfully making these suggestions at the appropriate forums, both public and private.
So you're talking about blended financing, but
there you go.
But the other issue as well, again, it's something that you've raised in the public arena, is to say that African states themselves need to do more to get their houses in order in terms of how we're perceived from a ratings perspective. What is it that you think that African nations need to be doing? Is that around the area of regulation or what?
So again, Nompu, when a government raises money, the sovereign, they raise money at a price that is determined by, firstly, the risk-free rate, the American risk-free rate, the rate at which the American sovereign raise money. That's what the base is globally. On top of that, people will add a risk premium. They'll say, how risky is this country? And then there's a premium. Now that premium is determined by many factors, but the most important factor is how the government is governed, how effective it is, how well it collects its taxes, how well it allocates those taxes to the needs of society, the social needs. And that's an important dimension, and that's what determines the risk. That's why people keep talking about the riskiness of the country, because that determines that price. We are arguing that that perception of the risk in Africa that creates that premium, the perception is incorrect and needs to be fixed. There are two ways of fixing it. The one is, as you say, I've said, governments getting their act in order, improve their fiscal processes and policies, how they collect taxes and so forth. Just on collection of taxes, we produce massive minerals, but only collect about 40% of the revenues. The rest disappears. So, I mean, it's scandalous that that's the case. So the second thing that they need to do is budget transparency. Be transparent to the world about your finances. The third one is improve your management of investor relations. So we, for example, as banks, spend a lot of time working on talking to the people that give us money. And governments ought to be doing the same. So that's on the one hand. We've also been saying the risk managers and the ratings agencies also need to improve how they think about Africa and make sure that they're using the right data to allocate the ratings.